So in today's video, I'm going to be talking about the two different types of support and resistance and the two indicators to use on Tradingview that'll help you use these two and identify these two support and resistance zones. So we're going to start with the support and resistance indicator that closes on the body, when the candle closes on the body, which is very important. So we have, this is the one, the shaded one right here. We click on it. It's the support resistance channel indicator. As you can see, it closes on the body, which is important when price is reaching the high, to let us know when is that next resistance, right? Where is that next resistance? The next indicator is this line right here, right? It identifies, which is another support and resistance. Many traders may not know this, but the high and the low of the candle, the wick, is also, or should be, you should be identifying it as a support or resistance. All right, so the indicator for this one is the support and resistance levels with breaks. And this is very important because if you don't know, you will only go by when the price closes on the candle. And if you're the type of trader that trades take a sell when it reaches a resistance level, you know, you may miss out on where the real sell may be identified. Now for me, this indicator works very well because I trade within support and resistance, and what I look for, if you look at my previous videos, there's 3 pushes, 3 to 4 pushes, mostly 3 push pattern that happens within support and resistance. So every time we get 3 pushes up and it reaches a resistance zone, I'm looking for a sell. Every time we get 3 pushes down and it reaches a support zone, I'm looking to buy. You know, this indicator right now is on the gold chart. I usually trade gold or the British pound dollar. So, and this is on a daily time frame. Now, let's take it to the 4-hour time frame. It identifies the resistance on the closing candle, and it also identifies the resistance on the high of the wick of the candle or the closing candle. It's very important. So for those of you who trade within support and resistance, this indicator, these two indicators are very helpful. So it's not just the support and resistance that close on the body of the candle. Remember, you also have to consider the high and the low of the wick of the candle, which is very important. Price will sometimes, it may revisit this wick, create a new high or a new low before we either get more sells or more buys. Okay, let's go down to the 1-hour chart. Let's see, I'm trying to identify the 3 push trading pattern so that you can see exactly what I mean. This is a good example right here. We got 3 pushes, 1, 2, 3. Price bounced off the low of the candle, the wick, gave us 3 pushes up, and then price created a new high. And as you can see, our wick, you can't see it, this indicator right here, the circles, I use it because it also helps me whenever I get my 3 pushes. It identifies the new high or the new low within that support and resistance zone, whether it's the high of the wick like we see here, or whether it's the body, where the body closed. So when we created the new high right here off this resistance using this indicator, it gave us 3 pushes down. This 3, this 1 right here, this whole thing, this candle formation, consolidation, short push, gave us that second push, A little bit of consolidation right here, and gave us the third push down right into the support and the support of the wick also, which helps, which I would have took a buy most likely right here, being that this is gold and is respecting what price has developed, is respecting support and resistance. So these indicators help you identify the support and resistance, giving you, that assurance. I think I'm saying it wrong. So that you can feel confident taking the buy trade. This would have been this is gold right here. This would have been a nice amount of pips just off that 100 plus pips just off that support right there. So if you're one that uses support and resistance, if you didn't know that the high and the low of the wick are considered support and resistance, maybe you would like to add this support and resistance levels, breaks to your Tradingview chart if you use Tradingview. These are the only 3 indicators I use, and it's because support and resistance is something that happens. It's something that is within price action. You don't see no EMAs here. You don't see any other stuff. Support and resistance is a must. Price always vary. It would either reverse, pull back, bounce off support, bounce off resistance to continue. So these indicators definitely help. It's not clogging your vision on the candlesticks, on where price may be going, or how the structure is developing. If you're one that trades support and resistance, this can definitely help. So these are 2 indicators, like I said. They're called support and resistance levels with breaks to identify the high and the low of the wick of the candle. The other one is to identify where the body closes of the candle, whether it is resistance, whether the candle closed bullish or bearish. Support resistance channel, that's the other one. If you want to add the semaphore indicator, that's what it's called, you can also add it too. Comment below, send me a message, or let me know if you want to, some kind of one-on-one, some kind of help with this, how to identify any of these potential moves to come. It's a 30-minute time frame. This indicator is very helpful. These 2 indicators, support and resistance indicator. So remember, the high and the low of the candle, the closing candle, high and the low, the wick, is also considered support and resistance. So that you can keep that in mind from now on, moving forward as a trader. Any questions, comment below. Let me know if you found this video helpful. Any more details I could have added to the video, comment below. Share this video. Subscribe to the video, to the channel. And, yep. See you next time.